The broadcast is now starting. All attendees are in listen-only mode.
It is a great pleasure to welcome to Asian Investing Summit 2021 Rajeev Agrawal, Fund Manager and Managing Partner of DoorDashi India Fund. Rajeev has been a regular at MOI Global online conferences. We are very grateful for his contributions to this forum and very excited about his presentation today. Just a little bit about DoorDashi India Fund. It is based out of the US and it enables investors to benefit from opportunities in Indian equities. Rajeev is also the founder of DoorDashi Advisors, where he has been working with investors who have a long time horizon. Rajeev has been investing in the US and Indian equity markets for 15 plus years. He follows value investing principles and finds that the Indian equity market provides wonderful opportunities for that style of investing. Prior to starting DoorDashi, Rajeev was a technology executive focusing on the financial industry and has worked with IHS Markit, Goldman Sachs, Bank of America, JP Morgan, and Dresdner Bank. He holds a BTech from IIT Bombay and an MBA degree from IIM Calcutta. And with that, Rajeev, very excited to have you with us again this year. I will now turn it to you. Please go ahead.
Thanks a lot, John. It's always a pleasure to be participating in the Asian Investing. I think it's a great forum that you have put together. And at this time of the year, I'm always looking forward to presenting one of the theses. So thanks for having me in the summit. So before I start the presentation, just a few disclaimers. The first one is that the content of this presentation is only for the information of the participants and not to be construed as investment advice. So please consult your financial advisor before acting on anything that you want to do. There are a lot of other bullet points as well. I will just bring your attention to the last one, which is that the presentation is for informational purposes. This is not an offer to sell or a solicitation of an offer to buy any securities. That will only be done through a confidential offering memorandum. And I would encourage all the participants to read the disclaimer at their leisure when they have some more time. So let's jump into the agenda. The agenda for the presentation today is to give you a little bit background about the fund, DoorDashi India Fund, and then talk a little bit about how our approach has done and what it has translated to in terms of the past returns. We will then spend the bulk of the time talking about the idea, and the idea that I'm presenting today is Kaveri Seed. We will spend some time talking about the investment thesis from a valuation perspective, what are some of the risks, and then summarize the thesis. So let's jump into the fund, DoorDashi India Fund. As I was telling John just prior to the session, it is a very fresh fund. We started it last month. So the purpose of DoorDashi India Fund is to invest in Indian equities. And the objective that we have is to seek superior long-term capital appreciation by investing in compelling opportunities in Indian equities. So I have been investing in Indian equities for the Indian investors. And now with this fund, it enables non-Indian or foreign investors also to participate and benefit from the opportunities that exist in the Indian equities. The philosophy that I have all along followed is the value investing philosophy. And that is what the fund will follow, which is obviously buying with a significant margin of safety. Now, I don't have to emphasize to this audience that buying with margin of safety not only increases returns, but it also reduces risk. The important thing which sometimes get confused when we talk about value investing is that we always buy cheap price to earning securities. That is not at all the case, because growth is a very significant part of value, as Warren Buffett has told us multiple times. And we believe that Indian equity markets are growth markets. And unless we price growth properly, we will not be valuing the securities properly. And so growth is a very significant part of value, and we account for that as we look at valuing any securities. Now, what that translates into from a philosophy to our investment approach is we have a few key tenets to our investment approach. The first one being a long-term orientation. And the long term here means a few years out. We cannot really think a decade out most of the time, and I think it's not required even. And we don't want to worry about a quarter, 2 quarters, or even a year out. We want to think a few years out, and that reduces the noise, focuses on what matters, which is the business. And that is really how we look at investing in any company or researching any company. The second thing is having quality management and quality business. Now, quality management is something which, in my view, is the more important characteristic that is required from an Indian equities perspective. And a quality management would be a management who is focused on the business, who is passionate about the business, somebody who is good with the capital allocation, for example, somebody who is going to be well aligned with the rest of the shareholders. And those are some of the important characteristics that we look for as we are looking at a business that we are interested in. And then coming to the business quality, now this will be things like what type of industry is it? Is it an interesting industry in terms of high returns on capital? What sort of market share the company has? It is also in terms of where do we see this industry? Could it become a commodity in the next few years, or will it continue to have certain niches? That's very important. And we then want to invest in situations where we think we have a competitive advantage. And this would translate into where other people are not willing to go, either because there is some risk that is perceived in that particular situation, or it could be that we have some insight that possibly the market might not be recognizing at this point. And lastly, we try to benefit from the fact that the stock market is there to serve us and not guide us. It is an auction-driven market. It gives us interesting opportunities from time to time. And so when there is fear in the market, we want to buy. And when there is greed in the market, we want to sell. So this is the framework in terms of how Doordarshan India Fund is going to operate. John has already talked a little bit about myself, so I will skip most of it, other than to mention that I am a SEBI registered investment advisor, and I'm also among the top ranked analysts on SumZero. It is a platform where many analysts come. So in the month of April, which is this month, I've been ranked in the top 10 in East and South Asia category, where there are multiple thousands of analysts in that particular category. I think the rest of the things are covered, so I will skip it. Now, what I want to then talk a little bit about is our past returns. Now, these are returns which have not been obviously in the fund because the fund has just started. So these are the returns that I have achieved in my personal portfolio, which is the core portfolio, because previously I was managing or I was advising other investors. And so because different investors are there who come at different times, it's very difficult to have a consolidated performance. And so this is the core portfolio performance here. If you see over the last 7.25 years, so from 2014 till end of March, we $100 have become almost $872 in the portfolio. So around the 772% cumulative return in the last 7.25 years. Compare that to a return in S&P 500 of 117.5%, and in Nifty 50, which is Nifty 50 is the benchmark in India, and which is the top 50 stocks in India, and that has a return of around 99.6%. And these are all in dollar terms that we have converted. You will see that from 2014 to 2021, there have been certain years where we have not done as well, primarily 2018 and 2019, where 2019 we actually significantly underperformed both the benchmark. But other than those years, we have done way better than the benchmarks, and that has translated into a compounded annual growth rate of 34.6% for the portfolio versus 11.3% for S&P 500 and a 10% for Nifty 50. And this is despite the headwind that we have had from the INR, because Indian rupee keeps depreciating every year, and on an average, the depreciation has been around 2%. If we look at the same returns in terms of the in the graphical format, so you can see how the portfolio has moved around, and it gives you a flavor of the fact that from sometime the beginning of 2014 till early 2018, the portfolio did very well. Then there was a period from 2018 till March of 2020 where it struggled, and then it has again picked up and done quite well since. Now, everything that I've said is about my core portfolio, and a few things I should mention, which is that these returns are before any fees, right? and they are unaudited returns, so they have not been audited by a third party, and they do include dividends, and definitely they may not be a good predictor of future performance. So I just wanted to give a flavor of our approach and what it has translated into the returns, and now we will jump into the idea of the day. And the idea that I'm presenting here is Kaveri Seed. So Kaveri Seed, a few quick facts about the company. It is in the agriculture seed industry. When we look at the price as of yesterday, it was 542 rupees, which, and if we convert a dollar to 74 rupees approximately, that translates to around $442 million of market cap for the company. If you look at it from a valuation perspective, at that price, it is trading at price to earnings of 9.7 times and enterprise value to EBIT of 9.3 times. If you look at the growth rates, how it has performed in the last 5 years, the revenues have actually gone down by 4%, and earnings have gone down by 3%. Now, the 5-year mark is an interesting mark because in 2015, it had the highest ever revenue and the highest ever profitability. And so it is sort of misleading in the sense that as we are comparing the 5-year mark, it's just doesn't feel like, I mean, we are comparing at a point of time which just was one of the best years for Kaveri. If on the other hand, we look at 10 years, then revenues have grown at 19% over 10 years, and earnings have grown at 24% over 10 years. So the 5 years numbers don't look as good, but over 10 years, the company has done very well, and we'll talk about why that has happened. Ownership wise, the promoter, the company, the founder of the company and his family owns 55.5% of the company. Foreign portfolio investors have around another 12%. The founder is also the chairman and managing director, which is G. Bhaskar Rao, and his son, G. Pawan, who is a doctor by profession, is the vice chairman and does handhold the company on a day-to-day basis. It has a decent amount of liquidity on the stock exchange. So on a daily basis, there are shares around $2.3 million worth of shares that trade on a daily basis. So some background about Kaveri Seed. So it was established in 1986, though G.V. Bhaskar Rao, who is the founder, has been working in the seed industry since 1976. But he established Kaveri Seeds in 1986, so that's why we are saying 1986. It is one of the leading seed producers across cotton, maize, and paddy. It also is among the leaders in a few other crops like pearl millet and sorghum and others, but those are not big business areas, and that's why we are not focusing on those. When we look at what happened to Kaveri, it had its IPO in 2007, and from that IPO onwards, for the next 6-7 years, the cotton really took off in India because this new variant was introduced, which is the BG2 cotton, which actually increased the yield of cotton very significantly. And Kaveri was able to come up with seed which allowed farmers to grow it and have a higher yield. So the company grew very, very well initially. And since then, with some of the challenges in cotton, which we'll talk about, they have diversified into new crop areas like cotton, like maize, like paddy, and some others. So those are the areas which are giving them better margins and better growth opportunities. Now, the interesting thing with a seed business is that you cannot just have one seed for all agroclimatic conditions. You need different seeds for different conditions. And that is where you have to continuously work on seeds and keep mixing new traits so that you can keep improving the yield in different conditions. And so Kaveri has been able to establish itself and build out its business so that it can cater to most of the agroclimatic conditions in India, which is around 12 agroclimatic conditions. So they have seeds across all of that. They also have a distribution across India, and they cover the two main cropping seasons in India, which is the Kharif season, which is the rain-fed season, and the Rabi season, which is the winter season. So they are able to cover both those seasons, and they continue to build out their entire opportunity set across all the various crops that are existing in India. And so they continue to work on that. In addition, beyond now, they are starting to expand beyond India. And so they are starting to export to some of the neighboring countries which have similar climate. And so that is another growth opportunity, which will possibly become much more meaningful for the company in the next few years. Now, before going further into the seed, let's just look at what is happening at a macro level, right? So the first graph talks about how much hectare is available per person in the whole world. And what is happening is, as the population has increased, right, from 3 billion to 7.5 billion, the hectare per person has come down from what used to be 4.3 hectares per person to something like 1.8 hectare per person. And so what effectively we are saying here is that as the land mass per person comes down, you need to have better seeds and better pesticides and everything else to ensure that you have good amount of crop so that you can actually still feed everybody. Right? So that's the first side, which is that the crop productivity has to grow up, and therefore a company like Kaveri Seed, which is in the seed business, will continue to be quite relevant. Then the second graph on the right talks about the hybrid seed and what is its penetration in India. This is a slightly dated graph, but still a pretty reasonable representation of how things are. And what you will notice is that in a crop like cotton, the hybrid seed penetration is almost 95%, right? But in things like rice, which is actually the biggest or the most cultivated crop in India, the hybrid seed penetration is only 5%, right? And similarly, if you look at corn, it's 55%, vegetables, it's 25%, and so on. So the idea why I'm giving this graph is to say that cotton is where a lot of the growth was, but it is also where the hybrid seed has been penetrated, and most of the farmers are now using hybrid seeds in that particular crop. And so if you want to gain in cotton, you have to take the market share away. But if you were to gain in, let's say, rice, you don't have to take market share away, you just have to educate the farmers. And as you educate farmers, you will be able to do very well in that particular crop area. And there are many other crops like wheat, it's almost zero. And one of the reasons wheat crop, there is no hybrid seed is because it is harder to create a hybrid seed. Now, one more point that I should bring out is hybrid seed. The purpose of hybrid seed is to improve the yield and to be able to better manage the environmental situation that you might have, pest, rain, heat, whatever, right? So the hybrid seed improves the yield and fights some of those nature elements which prevents those good yields. And that is why hybrid seed adoption, the increase in hybrid seed adoption is likely to improve the yield. Let's take at one more aspect, which is what about the seed industry? So now seed is a very good industry and it has very high entry barriers. Let's look at why. First is whenever you are trying to produce a seed, you need what is called as germplasm. Now germplasm is basically the genetic makeup of the plant. And so if you have germplasm, you can mix and match different germplasm and create different types of seeds. And so unless you have good germplasm, you cannot be developing new seeds. Kaveri, being in this business for 35 years, has had one of the biggest germplasm bank in India. Now then, once you have the germplasm, then you need to have seeds which are tailor-made for each of these different agroclimatic conditions. So you need to continue to ensure that it can withstand whatever the nature throws at and be able to take care of that. So therefore, you have to, it's not just good enough to have good trait, but then you also have to see whether the trait is going to do well in a particular condition. So you need to therefore have to customize your seed for different needs. In addition, developing a seed takes a very long time. It takes almost 5 to 7 years before you can even start having a trial given out to the farmers, right? And so this is what makes it hard for a new player to get in, because before you can even get in, you have to put like 7 years worth of effort to have a good seed available. Now, when you're trying to give out the seeds to the farmers, farmers are very, very careful not to take seeds from people who are not well established in the industry. So reputation with the farmers is very critical as well. And farmers initially will only take a small quantity, see how your seed does, and then possibly start buying in bulk if they see the benefit of the seed. So effectively, the cycle time in a seed industry, from the time you start working to the time it starts generating meaningful revenue, is somewhere between 8 to 10 years. And that effectively means that it's very hard for new players to get in. Also, whenever you're trying to produce seed for in a large scale, then you cannot be producing all by yourself, because ultimately seeds grow on the farm. So you have those seeds, the foundation seeds or the hybrid seeds given out to the contractual farmers, and they grow it on their land and then give it back to you so that you can then distribute out the seeds. So therefore, having good reputation and good connection with the farmers and having good control around ensuring all the seeds come back to you is very important. And then the last point is that in India, commercial seeds account for only 25% of the seed market. So what contributes to the remaining 75%? It is that the farmers save the seed from the previous year and then sow the same seed next year. The problem is that if you are using hybrid seeds, then hybrid seeds which have been saved from last year do not perform as well. And so there is something called a seed replacement rate, which means how often do the farmers go and buy the new seeds. And the expectation is that as farmers adopt more and more hybrid seed, they will have to keep improving the seed replacement rates so that they continue to have good yield. And so we believe that there is a decent runway that is available for a strong seed player to do well. So with that background, let's look at what is the investment thesis. So we have Kaveri Seed, who is a leading seed producer in India. They have strong operating capabilities, which has translated into good returns on capital, as we will see. They have some good growth opportunities in front of them. There is an alignment of interest with the owner-operator management, and they have been doing good capital allocation. And lastly, it is available at a reasonable valuation. Now, some of the risks which are there with the thesis, that bulk of the revenue, around 70% of the revenue, comes in Q1, which is from April to June quarter. The second risk with the seed industry is that the performance is impacted by the vagaries of nature. So suddenly, if a storm comes, a rain comes, a flood comes, whatever comes, it could have a big impact on what sort of seeds are bought by the farmers. In addition, if the agricultural commodity prices move a lot, that could also impact what a farmer is sowing and therefore what seeds are bought. So those are some of the key risks. So now let's take each of these investment thesis points one by one. Leading seed producer. So Kaveri is a top 3 seed company in India with a 10% market share of the hybrid seed industry. So what is interesting is that the Indian seed market has grown at almost 15% CAGR between 2011 to 2018 and reached a total market of around $4.1 billion in 2018. And the current forecast says that it will more than double from 2018 to 2024, more than around $9.1 billion. So that is a CAGR of 13% plus over the next few years. So first thing is it's an industry with a good tailwind. The second thing is that Kaveri is present across the key crops, which is cotton, which we have seen has penetration rate, hybrid seed penetration rate of 95%, but they're also present in maize and rice and vegetables. So in the hybrid cotton seeds, they have a 15% market share, and it does move a little bit up and down every year. So they are among the top 3 producers there. They're also the top 3 producers in maize seeds, and they are in the top 5 in other non-cotton crops like rice, in vegetables, and so on. Now, this diversified seed offering is a big advantage, because what happens is even if the farmer wants to move away from one crop to another, and if you have a seed for that another crop, then you at least the money comes back to you, irrespective of which crop they are planting. And so it gives some sort of consistency to the business. Also, most of the competitors are really specific to are in specific crops, and so they don't have the same stability that somebody like Kaveri will have. So here are some of the key pillars of the Kaveri business strategy and why we think this helps them. One is they have the multi-crop portfolio, which we talked about. They have a superior R&D, and the superior R&D, it helps them produce new seeds every year. So they are continuously coming up with new seeds and trialing those seeds and ensuring that whatever are good seeds can be scaled up. And this trialing requires good brand equity. And so good brand equity with the farmers helps them have a mind share over time, they have been able to get to a pan-India network. They are actually very strong financially, so they always have a net cash. As of December, they have a net cash of around 450 crores, which allows them to take advantage of the vagaries that occur in this industry. And then they finally have very robust supply chain capabilities. So they can collect the seeds from the farm, they can process it, and then distribute it out. So the last point, the strong supply chain capabilities, is the second point that I am mentioning here, which is a strong operating capabilities. So beyond the R&D, which we talked about, which allows them to keep coming up with new seeds, they have this germplasm bank, and we have already talked about how the germplasm bank is critical. And between the R&D and the germplasm bank, they can keep coming up with new seeds. So that's one aspect from an operating capabilities perspective. But once you have created the seed, we have talked about how you want to then have those seeds getting trialed on the fields, right? And so the cost of creating a seed is not as much. The big challenge is how do you ensure that those seeds are given out to the farmers and those farmers trial it, and then once a seed is good, try to scale it up. That is one of the more challenging things, because you want to ensure that you're controlling the seed, and at the same time, you have the ability of distributing it to different contract farmers. So that is really the challenge here, which they have been able to handle very well over the last multi-decade. They have created infrastructure around the supply chain that we talked about, and which allows them to have the pan-India presence. And all of this has translated into very strong operating margins of 20 to 30% for Kaveri Seed. And what is very interesting in India, that these seed companies don't have to pay any taxes because it is treated as agriculture income. So even at the profit margin level, profit after tax margin is also 20 to 30% as well. So that translates into good returns on capital, as you will see. Now, so here are some of the points that I mentioned. They cater to around 6 countries. They have 7 seed processing plants, which is take the crop back, clean it, ensure that it is good seed, and then send it back out to the farmers. They have a warehouse capacity of around 10 lakh square feet, around 1 million square feet. They have touch points with 40,000 retail and distributor touch points. Every year, they grow their seeds in around 65,000 acres, right? And these are all contract, they do this contract farming with around 1 lakh farmers in India. They also have around 1,000 plus people who work with these farmers on an ongoing basis to ensure that the crop is growing well. They are able to harvest the crop at the right time. And they have a 145 people R&D unit, and they have these 120 trial centers. So this is where they are trialing out different new crops that they're coming up with and ensure that it can take care of the different agroclimatic conditions. Now, this is what I was talking about. The third point, good return on capital. So company generates return on equity and return on capital employed of 20% plus over a full cycle. Now, we need to realize that a seed industry is cyclical. So if a monsoon or if the rains don't come properly, then the seed company may not do as well. Right? So therefore, there is a cycle, and so this is over a full cycle. Now, they have been able to achieve these high return on capital because they have a multi-decade knowledge of Indian agriculture and the farming practices, and they've been able to build the germplasm that I talked about. Now, the other interesting thing about the seed industry is that it requires limited capex. It requires a lot of operating capabilities that we talked about, but it does not require a lot of capex. It is just continuous trialing and erroring, right? And then figuring out what works well. So therefore, as the company has been able to expand pan-India, whatever research they are doing, they're able to leverage that more. And because of that, they are able to continue generating good returns on capital. So here is how the return on capital has been. So over the last, you can see over the last 5 years, it is most of the time it is 20% plus, and they had a poor result in 2017, and maybe we'll take it as a question if it does come. Similarly, return on capital employed is again 20% plus on an ongoing basis. As I mentioned, they have no debt. In fact, it's a cash-rich company, and they have, I was mentioning about the profit margin, and so you can see that the profit margin also is in the high 20% on an ongoing basis. They also have high growth opportunities. And this is what makes this country, this particular company interesting. So company was primarily in cotton hybrid seed earlier, and that is what was good for them because they were able to scale it out between 2010 and 2014. But what has happened since 2014 is that many other players have come in and everybody realizes cotton is a good crop. And so what has happened is because of so many players, the crop has become low margin, high competitive intensity business. In addition, government also put some controls on the prices, and that also took out the margin. So therefore, cotton has not been as lucrative. But company has been able to diversify into high growth crops like hybrid rice and vegetable seeds. And we will see how that has translated into the growth for them. I mentioned earlier that farmers only use, less than 5% of farmers use hybrid seeds for rice. And because rice is the largest crop in India, and in addition, the government is trying to push farmers to grow or to increase their wealth or double their wealth in the next few years. The government of India is also pushing farmers to adopt hybrid seed. So we do think that hybrid seeds in rice is going to be a huge opportunity for the company. And in fact, company has said as such that maybe in the next 3 to 5 years, they think rice opportunity may be bigger than the cotton opportunity for them. So we think that while cotton may deliver 5% sales growth, may not be meaningful, I think it is a non-cotton portfolio which could deliver good sales growth of more than 15% plus. And as the operating leverage kicks in, we think that these growth, both on cotton and non-cotton, should deliver a 15% plus PAT growth over multiple years. So that is what we think, and that is where the high growth opportunity that we think is coming in. Now let's look at how the cotton seed revenue and all the various sort of different segments of revenue, right? So you will see that the first chart on the left talks about the cotton seed revenue. And in the last 3 years, between financial year 19 to financial year 21, it has sort of grown at around 5% odd, sometimes growing, sometimes shrinking, and so on. Then the next business is a maize business, and actually maize is a very interesting crop because it can be grown in many different types of conditions, climatic conditions, and so it allows one to actually grow even where other crops cannot be grown. Maize is picking up in India, and clearly Kaveri has been able to grow that business at more than 10%. So you at the bottom you will see the numbers, and those numbers reflect the revenues in crores. So you can see that. For cotton, it grew from 391 to 435 over the 2 years. And for maize, it has grown from 146 to 186 crores in the last 2 years. However, when you move to the further right, you can see hybrid rice is something that has more than doubled in the last 2 years. So it used to be 51 crores in financial year 19, and now it is 132 crores. So it is a significant step up. And they are expecting that one of the hybrids that they put out in the market is what is continuously gaining market share for them, because the hybrid rice industry is not growing. Hybrid rice seed industry is not growing at this rate. So they're clearly taking market share also. But there's also better adoption as well. The next segment is selection rice. So selection rice also has grown at a decent pace from 64 crores to 96 crores. So 50% growth in 2 years. And then the last one is the vegetable seed revenue. Vegetable seed has grown from 9 crores to 30 crores, so more than a triple in the last 2 years. And so I think the company's management is quite excited about the rice business and the vegetable business. But obviously, the vegetable business is coming off a very low base, so it will take some time for it to have a material effect on the revenue of the overall company. I think rice is starting to get to that critical point, and it is the cotton which will provide the stability, and hopefully maize, rice, and vegetable which will give them the growth that I'm talking about. Now, this growth is also starting to become visible in the revenues, right? So in the first 9 months of financial year 20, cotton was contributing at 54% of the revenues, right? And rice was contributing 17% between hybrid rice and selection rice. If you look at the 9 months of the current financial year, which is financial year 21, cotton proportion has come down from 54% to 47%. And remember, cotton is a lower margin, right? So as that proportion comes down, the overall margin profile of the company will improve. On the other hand, the rice, which is hybrid and selection, has gone up from 17% to 24%. So that is the incremental shift that has happened. And we think that rice both is a good business, huge opportunity, and I think Kaveri has some good products out there in the rice seed industry. The fifth point that we'll talk about is the owner-operator management. So we talked about G.V. Bhaskar Rao, who founded the company in 1986, but he has been in the seed industry since 1976. So has been in this industry for 45 years, right? And he, along with his family owner members, own 55.5%. His son, G. Pavan, I mentioned, is the vice chairman and has been in the business for more than a decade. So he was in US for a few years, and then he went back to help his family with this business. C. Vamsidhar, he is head of marketing and on the board of directors, and he has been associated with the company for more than 2 decades. So he looks after the various marketing activities, the product development, and the promotional activities for adoption of Kaveri seeds. And then we have Mithun Chand. He is also a whole-time director, and he oversees the financials, and again has been associated with Kaveri for more than a decade. The next generation is already part of the business, which is a great news. And the next generation is also as well connected with the farmer community as a founder. And so that is very important in a business like a seed business, because you want to talk to the farmers, keep getting new ideas, and ensuring that you are addressing the issues that they are having, in their daily lives. I talked about good capital allocation. And so good capital allocation, we have talked about the fact that the industry itself is a good industry because it does not need a lot of capital intensity. What happens is, therefore, there is a lot of cash that keeps getting generated every year. And so company has been regular in returning this capital to the shareholders, and both through buyback and through dividend. So they had done a buyback in financial year 2018, 2019, and 2020. So for the last 3 years, they have every year been doing a buyback. In India, you can only do buyback once a year. So that is what they have been doing. And they have returned almost 6-7% of the market cap as the cash back to the shareholders every year, because you don't really need too much cash. But at the same time, they keep a certain amount of cash. So I mentioned that company is a cash-rich company with around 450 crores of cash. And this cash allows them to take advantage of the opportunities that do show up from time to time. And so, when the COVID crisis hit, they were not impacted because the farming was an essential industry, and they were able to send out their products to the different farmers. And even though they were not collecting money, the fact that they were cash rich allowed them to distribute the product and not have to worry about cash immediately. Lastly, agriculture is a volatile business in the sense prices can vary, and also sometimes the nature may not play. This is having the capital strength to tide over this inherent volatility is a very important consideration, and that is where I think the management has done a good job with the capital allocation. Now let's look at the valuation, but before that, let's just look at the revenues. So I mentioned that the revenue had degrown at 4 to 5% in the over 5 years, but you can see that from financial year 16, it has actually grown. And last year it grew at around 15%. The revenue grew year on year at around 15%. Similarly, EBITDA again has grown over time from financial year 16, just not from financial year 15. And last year it grew at around 15%. If you look at the EBITDA margins, I mentioned EBITDA margins are very good, very high, around 30-odd%. And again, they have been able to improve the margins as they continue to get into higher margin crop seeds. And lastly, on the earnings, again, the earnings grew last year at around 17%. And we can see that over the last 4 years, they have been able to continue to improve their profitability through whatever efforts that they're making. So now let's come to the valuation. So rather than have one point valuation, what I've tried to do here is to look at the valuation from 2 different angles. One is the earnings per share growth and the price to earnings, right? So right now, as I mentioned, the company is trading at slightly less than 10 times earnings for a business which generates a return on equity of 20%. and which has done a growth of 15% plus in the last few years, right? And so here, what we are assuming is that earnings per share growth is, let's say it's 8%, 12%, and 16% as the three different options that we have taken. And let's assume that a price to earnings stays at 10x, moves to 13x or 16x as the three different alternatives. And you could then come up with what would be the possible price and possibly what could be the return from the current price. So that is really what I've tried to do. And I think that a 12% earnings per share growth is a very conservative estimate which I have taken. And I think at a 12% earnings per share growth, we could expect like a 13 times multiple as a pretty reasonable multiple. And this sort of price and return is over the next 2 years, because we think by end of financial 23, they should be able to have a good 2-year run where they can take advantage of some of the things that I've talked about. So we think a good growth and a consistent growth will help the market see what the potential of Kaveri and possibly have some sort of a re-rating as well. Even if it were not to happen, we think from here, the risk of the price falling is pretty low just because of where it currently trades at and the type and the quality of the business that is there at Kaveri. Now let's look at some of the key risks. The first thing which I have talked multiple times is that agriculture prices are, produce prices are volatile, right? And that does impact the sale of seeds. And this is something that everybody should keep in mind, that, you know, if the rains don't come as well, or if there are natural problems, then that could have an impact on the sale of seeds. The second one is that the bulk of the revenue of the company comes in the April to June quarter. So again, if there is a problem in that particular quarter, we are in that quarter now. But if there was an issue in that particular quarter, 75% of the revenue comes in that quarter, and that could have an impact. Now, the important point again here to note is that last year, 2020, actually we had a big issue last year in that exact quarter, right? And the company did. We think that this is an industry which is an essential industry, and therefore this is very unlikely that that particular quarter or this particular area will get impacted in a major manner. Also, the another thing we need to remember is that farmers are a big vote bank for the government, and so the government will try to ensure that they please farmers. And so one of the things that has happened in the past is that the government has imposed restrictions on price of cotton seeds. So they have said you cannot sell a cotton seed package at a price beyond a certain amount, right? And so that took out the margin, as I mentioned earlier. One of the reasons why that price restriction was imposed was because Monsanto was having very high royalty on cotton seeds for a very long period of time, and I think government was trying to impose restriction on that. But it could also lead to lower innovation in cotton seeds. It could lead to a similar practice that could come into other seeds. We don't see that. In fact, in the rice, where I mentioned that the hybrid seed is only 5%, government is trying to encourage hybrid seeds. So we just don't see why government will impose restriction and reduce the incentive for companies like Kaveri. Also, you know, the other risk is that the seeds have a long lead time of 8+ years. And so it is possible that you keep working on something and you realize that all that effort has come to nothing, right? And so you could be going in a completely wrong direction as well. So that is a big risk, that you're not really keeping up with the times and going in a completely wrong direction. And lastly, I mentioned that the company is not subject to taxes for its agriculture income. They do pay taxes on the cash or the investments they make with the cash, but on the agriculture income, they're not subject to taxes. And if that were to change, that could have an impact in terms of the profitability and the return on capital employed. So let me summarize the pieces. It's a strong cash-rich company with a good P&L track record. It has diverse product portfolio across different crops that we have talked about. It has a good brand salience. It is well respected by the farmers, and they are willing to try out the products that Kaveri produces. And because of that, they have the unrivaled farmer loyalty, which they have been able to nourish and encourage. They have leadership across various crops. As I mentioned, they have among the best R&D. They keep coming up with new seeds every year, and they have a good germplasm repository. They are now pan-India operation, and they also are now expanding beyond that to the to countries in the nearby geography. Seed industry is a high entry barrier industry, and it is an indispensable industry. And the company is well placed to continue to scale up production of the seeds. So with that, thank you very much, John. Here are my contact details. If there are questions subsequent to the presentation, I would be very happy to take them. You can reach out to me through all my contact details that I've listed here, but very happy to take any questions that participants may have now.
Wonderful. Well, thank you so much, Rajeev, for the presentation. A reminder to everybody on the line, if you do have a question, feel free to type it into the online interface. I was wondering if you could talk a little bit more about the cyclicality of this business. You showed the 10-year growth, which has been impressive, but then on a 5-year look back, not really any growth. So how cyclical is this business, and how should we think about the troughs and the peak of the cycle?
Right. So actually, John, this is not necessarily very cyclical. What has happened is for the 5 years, the 2015 results, if you see, those results were very good because at that point, the hybrid cotton, which was their primary seed, did very well in that particular year. Right, the rains were very good, and they had the best year ever. And this is true because there were less number of competitors, and there was just like Kaveri had good product, and they were able to take advantage of that particular season. But the cyclicality which I'm talking about is coming from the fact that it is possible that in a particular year you don't have good rains, for example, right, or there are some natural issues, and that may reduce the uptake of the seeds that the company produces. Now, what is happening with Kaveri, though, is that they now are also getting into other seeds, like we talked about, like rice or into maize, right? And they have many other seeds as well. So what is very likely is that if cotton doesn't do well, because cotton has the prices of cotton are down, for example, right? But farmers will still sow something, right? And so they will sow whatever is the most remunerative, and it is now likely that Kaveri would have presence in most of those crops. And therefore, I think the cyclicality may not be as relevant as it was, let's say, 5 years back, because they were primarily in the cotton seed industry.
That's very helpful. Thank you very much on that. You made a very strong case for why better seeds are needed, given that hectares per capita is going down in the world. But can you just talk a little bit about some of the pushback that we're also seeing, particularly in the Western world, around genetically modified seeds and those kinds of things? Do you think that could be a longer-term risk here?
Sure. So actually, what is very interesting, John, is in India right now, genetically modified crop is not allowed, especially if it is edible. Okay. So they have only brought genetically modified crop only for non-edible items like cotton. For rice and for maize, these are hybrid seeds, so that you have not modified it genetically. What you are trying to do is to bring the best attributes of the different varieties of a maize, bring them together, and try to see how you can come up with a better maize seed, right? So it is absolutely possible, to your point, that the pushback on genetically modified seeds is real, and I think in many places we are seeing it. I personally think from that perspective, if that pushback does grow, a company like Kaveri might benefit because they are not yet into genetically modified seeds for the edible crops. They are into genetically modified seeds for the non-edible, like a cotton seed, and that is where actually they were paying royalty to a Monsanto because it was their technology that they were using.
Thank you. That's very helpful. Rajeev, I'm wondering, for those who would like to track this idea over time and see how the thesis is playing out, what would be some key data points to keep an eye on?
I would think, how they grow in the vegetable and the rice segment will be critical because they are quite bullish about it. And I think the recent data, the last few years data does indicate that that is where they are actually continuing to do well and gaining market share. Now, what does happen in an industry like this is that the seed after a few years it starts becoming weak because the natural elements also keep evolving. So I think it will be interesting to see how big of a growth they continue to have in these high growth areas. So that's one, I would say. The second thing is the cotton has been their ballast. That is what has given them the ability to continue to do well. And if they start losing market share in that particular space, that is where we are starting to hear that they are having some good competition from the top players. And so it will be interesting to see if they continue to maintain their market share or start getting hurt because a farmer will only want to take the best seed, right? And so if the crop is not as good because of Kaveri seed, I don't think Kaveri seed will sell. So I think both on the cotton side, we just need to see if they can maintain the market share, but on the new segments that they are quite bullish about, we have to see if they are able to continue to gain the market share and continue to grow the revenue. I think those will be the two main points, I would think.
It is encouraging that the main promoter here or key management owns a majority of the company. That speaks to alignment of interests. Do you have any further insight into how the future will play out here with regard to whether this company might get sold at some point, or does the CEO plan to basically keep it an independent entity and run it over time?
I think the fact that the next generation of the family is already in the business, because GV Bhaskar Rao is the CMD and his son is already part of the business. I think it is very, very likely that they will keep it independent. And because otherwise he would not have left, his son would not have left, G. Pawan would not have left his sort of flourishing career in US as a doctor to come back to India and get into the seed business. So it is very likely, though there has been no certainty that with which they have not said that they are looking to sell, and we have not heard anything. There was a mention, or there was a small stake sell around 5 years back, which did happen, but since then they have not really done any sale of their stake. So as of now, it seems to us that they will continue to keep it independent and continue to grow it. That's at least how they are sort of portraying it on all the conference calls.
What would you like to see on the capital allocation front going forward? Do you want to see return of capital to shareholders increase as well?
So I think right now, John, for the last 3-4 years, they have returned all the cash that they have generated, right? Because they had enough cash and they really did not need any for the business. They have some capex, but that capex is pretty much sort of the depreciation that they are incurring. So effectively, earnings is pretty much free cash, and they are effectively able to return most of that free cash. I would actually want to see if they have opportunities, especially in some of these crops, and they think they need to invest some money, they should, rather than just return everything. And so I personally think it just does not take as much capital as it takes time. It just takes a little bit more time to actually come up with new crops. So I think from a capital allocation perspective, they've been doing well. One area that could be interesting is if there are other seed players who are available in the market for buying, and it sort of allows them to consolidate their position. That could be another opportunity that could be there. Now, in the case of Indian seed industry, there are quite a few private players, right? And it is not always obvious if somebody is available or not. But if somebody were to be available at a good price and it makes sense, then I think that could be another way to consolidate and become a bigger player. And that would be quite meaningful and helpful for the investors.
Great. Well, I will leave it there, Rajeev. Thank you so much for taking the time to be with us today. I would just encourage our members to feel free to follow up with you directly with their own thoughts or questions. Thank you for sharing your contact details here on the screen.
Fantastic, John. Loved it. Thank you.
Great. And thank you all for listening as well. It's really always a pleasure to have Rajeev in this forum. We truly appreciate you, Rajeev, taking the time each year, and we certainly look forward to more in the future. Goodbye for now.
Thank you. Goodbye.